Welcome back to Trading 360. I'm Nicole Petalides. Time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts here to take us through the trades. Scott Nations, President, Nations Indexes. Good to see you both. Good Monday morning. It's a 4-day week for trading, so we'll have a lot to get in. Let's start off, Scott, how you feeling on this Monday with right now the S&P at 52.27. Where are we headed?
It's tough to say that we're not going to continue higher. Listen, the market likes to move in a trend. It tends to move higher, as you pointed out a few minutes ago. I do think that the market is overly optimistic about what the Fed is going to do. As you point out, dot plot says 3, and that's probably really optimistic right now. I don't know how they can be very aggressive through the remainder of the year if inflation remains at 3.5% and unemployment remains below 5%.
Right, understood. Okay, so let's get to how you are going to go about these picks today. I mean, we'll start off with Google Alphabet. I just finished reading about the EU scrutiny. Tell me a little bit about where you think this is headed and why.
Yeah, it's down 1% today, as we just saw. But Google, I think, is the best under-the-radar AI play in the market right now. We love to talk about NVIDIA. We love to talk about Broadcom and the more or less pure play AI names. But Alphabet is going to do a great job with AI. So I'm a buyer of Alphabet today, largely because, and this is a short-term buy, and that's largely because I think it wants to make a higher high. That would be a high above the January 29 high of 155.20. And compare the forward PE for Alphabet 22 to the forward PE for those, again, headline or pure play AI names. And it's a real bargain. Also, some of those names have option markets that are very frothy, and Alphabet does not have that. The out-of-the-money calls 30 days out are about equally priced with the out-of-the-money puts that are 30 days out. So people are as bullish as they are bearish. They're not over themselves bullish. It's not frothy. It's just a really interesting name that we can buy and look for a little bit of a bounce.
Right, understood. So one for the AI craze that still has some room to run. Let's talk about this. Ben, your thoughts on the chart?
Yeah, the technicals support that narrative, Nicole. I mean, this is a stock that's been knocking on that 155 door for a while now. And if the broader market trend that Scott spoke to continues to the upside, I would imagine Google eventually is going to take that level out here. Let's begin with some of the price activity we've seen as of recent. Slightly lower to begin the week, but take a look at the rally that we saw off the beginning of lows that we saw beginning of last week all the way up to 152, 153, and you can also see that sideways consolidation. So a stock that's in acceptance or holding on to this upper level, this area right around 150 that we saw last week. Again, kind of that wave pattern playing out here. So kind of a chop trade right now at these levels. Nothing really compelling here, but just did want to speak to the strength we saw in the beginning of last week and how we've been holding this upper level, because that feeds into that upward momentum, that trend we've seen to the upside on the longer term. Speaking of, I've got another chart to show you. And here you can see that intermediate trend to the upside that we've seen. We've got an hourly candle chart here. We're looking at price activity over the last few weeks, talking down around 131, and then recently again back up to this area that we've been kind of balancing around 150. So you can also see along the way up some of the areas where the market's paused and regained composure. You can basically see this pattern that we just identified on the 5-minute candle chart, high conviction sideways consolidation, play itself out multiple times here. So right now balancing around 150, as long as we hold above 143, a very bullish pattern here. And again, in line with what Scott was saying in terms of the trend of the upside, the broader market. Let's just check in on where we are in terms of the 50, the 200-day moving average. We're holding above both. RSI supportive of some more momentum to the upside if we continue to see price gain here. Mentioned knocking on that door, that 155 level. I mean, again, we've added some time onto this chart. You can see going all the way back to the beginning of 2023, we've been in a trend up. So multiple time frames trending higher. I'd agree with Scott in terms of the bullish narrative here, Nicole.
Yeah. All right. So, look, I mean, he thinks that you have something here, Scott. Final thoughts, because it's at 149 today.
Yeah, Alphabet Google, whatever you want to call it, is just one of those names that's going to continue to do really well, very profitable, reasonably priced given that. And so I think it's going to, again, try to make a new high. But if you wanted to buy it at this level as a longer term holding, I think that that would be a great way to really buttress your portfolio.
Yeah. All right. Next up, we have Tesla. It's down more than 30% this year. Where do you feel it's headed?
I think it's going to continue to go lower. I am bearish on Tesla. We'll lay out the trade in a little bit. One thing about the technicals, it's making lower highs and lower lows. I'll let Ben get into those technicals later on. So let's focus on the fundamentals. Forward PE for what is essentially an automaker, even though we love it. We don't treat it like an automaker, but forward PE of 55. It's now fallen out of the top 10 biggest names in the S&P. In fact, it's number 12 now. The entire EV space is hurting. Tesla in particular is hurting. And so I am bearish. Now, I don't want to sell it short because it's a name that could really rip higher if there's some news coming out. The way to participate to the downside and define your risk is to buy a put spread. And so with the stock at about 170 earlier today, I could buy the 140, 160 put spread for $5.30. And what do? We're buying the 160 put in May. This is the May expiration, buying the 160 put. We're reducing the cost of the whole thing a bunch by selling the 140 put. So we're long a put spread. Again, we're paying a net of $5.30, or about 27% of the width of the spread. And that's really the way to look at these sorts of things. The real cost of these is the width of the spread. That $5.30, that's the most we can lose on the trade. As with any put spread we buy, what's the maximum we can make? Well, we can make $14.70 if Tesla is below that 140 strike at the May expiration.
Okay, and look, I mean, when you look at the downside, when you start talking below 150, that's something. Let's take a look here, Ben.
Yeah, let's break it down. Let's take a look at the charts. We have been coming under pressure, but more sideways recently than what we had been seeing throughout the beginning of the year. So let's just start again with this example as our last one. Take a look at some of the price activity we've seen over the last week. And here you can see kind of that sideways consolidation. We've got a pretty well-defined upper, pretty well-defined lower extreme. And we're kind of hanging out right in the middle as we kick off this Monday, right around 172. Keep an eye on the highs from last week, the lows from last week to try and gauge that first indication of real directional conviction throughout this week. But as of right now, again, mostly just holding within these parameters. So when in doubt, zoom out, right? Let's take a step back, add a little time on. Scott mentioned a series of lower highs and lower lows. We've got a 60-minute candle chart queued up here, Nicole. We're going back to the beginning of the year. Migration of value to the downside. Scott thinks that it's going to continue, right? The trend is your friend. He's basically saying continuation more likely than change. Basically, what I'm looking at is the fact that we've been balancing around 172. So this is an area of consolidation where the market's found acceptance of this lower level. As long as we hold below 185, it looks like the bears are still in charge here, right? Migration of value to the downside, key areas being established on the way down. The bears are looking for a new area of value to form at a lower level, a breakout to the downside and continuation of this pattern, right? They want to see value continue to form at lower and lower levels. Let's take a step back here. Let's pull up a daily candle chart because, Nicole, you mentioned 150, right? Here's that level. If you remember, it was back in April of last year, a key lower level to watch. We're kind of testing it right now as we kick the week off here. Take out those lows from last week here ultimately, and yeah, you'd be opening up the door for a retest that lower level. Now, RSI kind of limited in terms of real conviction, but the 50-day moving average of 200 really speak to what we've seen in terms of the move off the highs from last summer up around 299, the move off the highs from the beginning of this year up around 260, 250, holding below the shorter dated, that's the blue line, the 50, and below the longer dated, the 200. So this is an instance where, again, somewhat counter to what we're seeing in that broader market trend, the bears are in charge here, Nicole.
All right. And the bears and people have, this isn't now indexes. People are owning this one in a big way. They want to see 300. They don't want to see 150. Final thoughts, Scott.
Elon Musk has done a wonderful job, but I think people have gotten too wrapped up in Elon Musk. I think so many owners of Tesla shares own them only because they have a man crush on Elon. And that's just a horrible, horrible investment thesis.
All right, next up, last but not least, we're looking at FedEx, which gapped higher on its news last week on its earnings report, hit new highs. Where do you think this one's headed and why?
Yeah, but Nicole, it's given a bunch of it back today. So I'm going to short FedEx
Yes.
at $278. As you pointed out, it spiked last week on earnings, better than expected earnings, but that all came from cost cutting, which is good news. But in this sort of environment, in this sort of inflationary environment, you would hope that they would also be able to increase revenue, beat on revenue expectations. And a big part of the spike we saw last week was also due to the announcement of a $5 billion buyback. I'm not a fan of the timing of most buybacks. I think most companies buy at the top and quit buying at the bottom, which is, as we know, the wrong way to do it. And FedEx is just a really tough business with low margins. And again, the absolute lack of momentum higher today is a real problem. Again, I'll let Ben talk to most of the technicals. Two things that are important to me, though, is the double top that is being rejected. That's at the 285 to 290 level. And Ben mentioned RSI in regard to Tesla. That is by far my favorite technical indicator of all. And for FedEx, the RSI is at 73, got as high as 80 last week. And we know that above 70 means overbought. So FedEx is overbought, and I'm going to short it here.
Yeah. Okay. And that was a conversation I had last week too. I'm like, where is oh, there's so much demand and package volume is crazy. And it was more about the cost cuts and the buyback giving the boost than it was about, they do have pricing power. I will say that. Let's talk about this, Ben. Your thoughts on the FedEx chart, 279 today.
Okay, hold on to your hats, guys. We're going to fly through a couple charts here. Scott mentioned the rejection of this upper level that we've seen. It's not what the bulls were hoping for in reaction to earnings. Initially, we got a big spike up. You can see we started to kind of grind lower, though, giving back most of those gains up to just shy of 300, back down to, we're below 280 here, currently trading down the day by about 1.5% here. Take a look here as you can see where this put us kind of on the bigger picture here, going back to our last earnings around quarterly results, which sent the stock lower, if you remember. They were trying to regain composure after, and look at this, that shock that we saw to the upside again, kind of starting to sort of give back, at least half of those gains. So let's take a look here, though, because the stock has been trending higher. Now, Scott mentioned here this test, this double top that appears to be forming. This is a key test of an upper extreme of a range that we've been in, currently balancing around this 250 level. So again, not what the bulls want to see, because if this truly fails, ultimately it opens up a door for the stock to kind of drift back to this lower or this middle of the range here, 250. Take that out, you could retest these lower extremes around 225. So a key area, again, as Scott mentioned, did just fail or appears to have failed. Basically, after that breakout, you want to see higher highs and higher lows. You want to see green candles with conviction, energy, follow through, and then a new area of value form at a higher level. And initially, it looks like they're getting the exact opposite of that, right? Look, two red candles. Again, not what the bulls are looking for. Scott mentioned RSI. That looks like it got a little bit overextended as well, and possibly coming off similar to what we saw back in December, if you remember that big gap up that provided that upper extreme. So still holding above the 50, still holding above the 200. But yeah, again, this rejection, not what the bulls were looking for. Still a trend up over the longer term here. But yeah, something to be watched very closely here in the coming days and weeks, Nicole.
Yeah, okay. Final quick thought, Scott Nations, we'll give you the last word.
Well, Nicole, it's a wonderful brand that's not a very good business. Again, margins are tough. They have competition. Amazon beats them up on pricing. And so, again, a wonderful brand, but that doesn't mean we have to be investors.
All right. Thank you both so much. Scott Nations of Nations Indexes and our own Ben Lichtenstein there on the charts for the big three today.